Now, no fewer than three central banks meeting this week. The FOMC, the Federal Reserve, on Wednesday evening at 6 p.m. UK time, we get that announcement. High noon on Thursday UK time, we get the Bank of England. And early in the morning on Friday, we get the Bank of Japan. Let's take a look now at some of the prospects around some of the trades to watch out for. Joining us from Daily FX is Justin McQueen. Justin, good morning to you. I know that you believe the Fed is probably going to be the most interesting, certainly the biggest one to watch out for this week. Just line us up, if you can, in terms of where we go on these central bank meetings.
Morning, Jeremy, and thank you for having me. Yes, like you said, firstly with the FOMC, of course, typically garners the most interest in financial markets. And this week, particularly given the continued rise that we have seen in global bond yields, in particular the US yield with the 10-year now yielding roughly around about 1.62%. Now, with regards to the meeting itself, there's going to be a lot of focus on the dot plot. Keep in mind that the last time we saw the dot plot was back in December, and it's fair to say that a lot has changed since then, most notably the fact that we've had now a blue wave with Biden and his party, and subsequently with a 1.9 trillion fiscal package now signed into law, and $1,400 stimulus checks already hitting Americans' bank accounts. Subsequently, the outlook has changed pretty much on the growth front quite notably, and we've seen that with recent forecasts from the OECD increasing their growth forecast by 3.3 percentage points in 2021. So we're expecting to see the Fed to boost their growth forecast. And also on the inflation front as well, it's becoming more certain that in the short term, that inflation will likely pick up. However, the Fed and other central banks alike have stressed the fact that this rise in inflation in the short run will be temporary. But in terms of the dot plots itself, also the federal funds rate, keep in mind that the Federal Reserve don't expect a rate hike by the end of 2023, and they expect a rate hike in 2024. However, we already have five dots expecting a hike. Potentially, we could see a couple more shift over, and it's going to be really a question as to whether the median would shift into expecting one rate hike by the end of 2023, or does it remain at unchanged through to 2023. So that'll be definitely one of the main focal points for the meeting this week for the FOMC.
Just want to take a look at the euro dollar chart if we can, because I think this is interesting. Last week we saw the euro rise, didn't quite pass the 120 level. We're currently trading at 119.27, second day in a row of losses for the euro against that US dollar. Do you think that the divergence that we're seeing from the Fed to other central banks, certainly from the European Central Bank last week, do you think that this has the potential to be a positive dollar story this week from the Fed when we see that announcement?
Yeah, I would agree with that. I think what you've been seeing in the bond market as well, this widening rate differential moving in favor of the dollar against the euro, but also as well the sort of widening growth differential as well in favor of the US, thanks to this massive stimulus package now being passed in the US, supporting the dollar over the euro. So I would expect into the meeting that markets could start to see a bit of a hawkish reaction, particularly if we do see those dot plots move in favor of one rate hike by the end of 2023. Then you could see a bit more gains in the dollar against the euro. And it's pretty much a theme that we've been seeing with regards to the ECB to other central banks as well, like the BoC last week. And so we're starting to see a bit more weakness into the euro. So definitely we could be moving back below the 119 handle and look towards those lows that we did see last week.
Yeah, let's just focus on the Bank of England. As I said, high noon on Thursday when we get that announcement. It's interesting, actually, last week, the Governor, Andrew Bailey, saying that there's light at the end of the tunnel. We know from the last meeting that there's every chance the Bank of England certainly is expecting we're going to see inflation creep up to that inflation target of 2%. I just wanted to, before I go back to you, Justin, just very quickly reference what's happening with sterling against the US dollar. Very similar sort of picture here that we've got. Last week, we were 2-week highs, I think, actually, at the back end of last week. Since then, we've seen a little bit of a pullback, currently trading 139.30. What sort of impetus does this have, do you think, on Thursday's announcement? Do you think there's anything in the announcement on Thursday we're expecting that could move the markets?
I think looking towards the Bank of England, it's not a monetary policy report, so I wouldn't expect any sort of significant changes. Of course, we have seen the fiscal, the UK budget from the Chancellor, which is probably slightly more a looser fiscal policy than what the Bank of England expected. So that's supportive there for the Bank of England, but I don't expect too much in terms of changes. Keep in mind, we did have the meeting back in February, so I'd expect probably some of any notable changes to come into the May monetary policy report. But one thing I would say, and probably one of the most interesting comments that we've seen from Bank of England officials over the past 6 weeks has been from Haldane, who stated that inflation could potentially be a bit more sticky at the sort of higher end than what the Bank of England actually expects. So he's definitely been pretty much the most hawkish member on the MPC, and subsequently he's expecting inflation to potentially be a lot higher than what the consensus is, which is pretty interesting. So maybe going down the line, we might start to see a bit of a split in terms of the voting. But for this week, I don't see a split in terms of the QE or rates or anything in that sense. I do expect it to be pretty much a sort of a keep calm and carry on really for the Bank of England.
Yeah, let's move on and take a look at Bank of Japan if we can on Friday. And for this, I want to take a look at what's happening with the dollar yen. As I was tweeting this morning and emailing the IG clients this morning, there was a spike up. And in fact, this is the dollar against the Japanese yen today. We've seen a spike up to levels not seen since the 8th of June last year. This dollar has been on an absolute rip against that weaker Japanese yen. Anything out of this week's meeting necessarily either one supports that weakness for the yen that we've seen, or two, do you think could come out of the meeting which might give a steer to a trade around dollar yen?
Yeah, I must admit, looking at dollar yen, it's definitely been pretty much a one-way street. And I think, when we see trades like this, I do get a bit cautious as there's obviously a chance of a bit of a pullback. And I think for the Bank of Japan, I must say it's probably one of the more interesting Bank of Japan meetings that we've probably seen in a while, given the fact that the central bank will be having their sort of long-awaited monetary policy review. And this will really sort of tie into whether they're looking to widen the yield curve target potentially by an extra 10 basis points either side, so targeting 0.3% and then minus 0.3% from the current of 0.2% to minus 0.2%. So definitely there could be a bit of interest there, and potentially if we do see that widening, allowing a bit more fluctuation in terms of Japanese bond yields, then potentially you could start to see a bit of a pullback in the Japanese, a bit of a pullback in dollar yen, but then also as well, the BoJ looking to scale back their ETF purchases. We did see overnight comments from out of the Nikkei Asian Review stating that the BoJ could actually remove their current target of 6 trillion yen of ETF purchases. They are now, the Bank of Japan now, the largest holders of Japanese stocks. So if they were to remove that target, then technically that would mean sort of less easing from the Bank of Japan, and that could filter into a bit of strength for the Japanese yen. But I must say, in terms of dollar yen, it's pretty much been a one-way trade in the sense that it's been pushing higher with US yields. It's largely been a rates play on that front. But with this meeting, we start to get the sense that the Bank of Japan are sort of withdrawing stimulus slightly, then that could possibly be enough to see a bit more of a two-way price action in dollar yen.
Great. Okay. All right, Justin, thanks very much indeed. Looking ahead to the central bank interest rate meetings this week, those of major interest. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.